Hello guys, welcome to the Trading Parrot. We'll do the market morning update, starting with the 4-hour and daily. As you can see, the RSI breakdown has been confirmed. That's why I'm keeping the 4-hour in the red, although we now have a new bottom information that we're gonna just look in a minute. On the daily, I'm gonna keep it in the gray because the trend line has been broken to the downside. That is what happened on Saturday, and so far we still don't get the potential revenge rally that we flag as incoming. We confirmed the MACD bear cross as well, and the hash ribbon buy signal has been confirmed. On the weekly and monthly, everything stays the same. As you can see, in terms of CME over the weekend, the closing price on Friday of 108.9 on CME and 108.7 on Binance hasn't been yet filled. That constitutes a fourth CME gap that probably we are gonna close very quickly, and for that the price just needs to come down around $1,800 to the downside, and that's it. Let's go with the 4-hour. As I mentioned, we have a bottom information. This is a double bottom that has a neckline around an RSI 54 and has already moved to the upside. You can see that thanks to this bottom formation that is holding the previous Y line of resistance, we are coming very close to the fair value gap of 110. At that point, we have some liquidity pools that we could be seeing in confluence together with the fair value gap attracting the price. And let's go into the daily, but before that, notice that we have the breakdown on the RSI 4-hour that has moved the price into the red support, but it has done a little bit of damage to that support, and still after that we could be going into the 110. Once we get into 110, that is kind of the line in the sand because there is incentive to go there, but we talk about that incentive as the potential line that could define further continuation to the upside, or just going for that tiny incentive and continuing with an ABC correction, something more like this. You can see that that wave A took a lot longer because we put a double bottom, so we put one move in here. This could be considered the final C, but since we're now moving up, I still consider this part of the A and the B, and now we're looking where we're gonna stop on that B to see if we get rejection from 110 or if with this move we can carry on up. Now on the top end we have a new kid in town. 113k, 114k has become really heavy in terms of liquidity pool, so I wanna make a stop once we get there. Notice on the daily now, as we transition higher in the time frame, we have a bear cross now confirmed on Sunday, and this is the current status, right? So we have a rolling over in a bear cross. We'll see if we get another bull cross right after this. Notice as well the divergence on the MACD against the price increasing in the context of an ascending wedge that is bearish, but we are starting a potential banana zone, so we need to be prepared for that bearishness. It's a typical pattern that breaks to the downside, except in the banana zone where you increase the slope and you could start a very vertical impulsive move if we are due to succeeding here. We have the breakdown on the daily. We broke the support, and the most typical, the most likely scenario is that now we hit the RSI of 75 and we see a rejection from there, unless we go into 85, which is the top of the range, and we initiate the final state of the banana zone. You can see the previous bananas 1, 2, 3, and 4 in the past and see where are they located in the price. You can see that there was somehow breakdowns in those areas, but we still made it into the top of the range. So that's why we're gonna measure now that 75 most likely scenario, kind of a range top that you could visualize how high we can get with high likelihood, or if we enter banana zone really during this week, getting into the 85. So let's prepare an RSI band from 75 this time. That will be the yellow that we have in here. Let's focus on price now, and that is around 115.6. That will be 75, so that gives you a range of how high we can get, still in a context of just a revenge rally. If after the revenge rally we form bearish divergences in a channel down, still with impulsive move, with that energy we still have enough to kick up until 132 according to the momentum in here. Of course, there's always the opportunity of doing something completely out of context, completely out of schedule, but that is what the momentum says is the most likely two scenarios. 75 highest, definitely like a 70%, and then you got a 20% or 25% remaining that with the 132, and then probably less than one, way less than one, that we do something absolutely different to the upside, that we are just giving you out of 100% chances of the 100% chances of going up, how we divide the different scenarios to the upside. Of course, there are separate chances to go to the downside. Let's look at the weekly in here. We can see how many candles we have in the weekly. This is just ridiculous. 1, 2, 3, 4, 5, 6, 7, and this could be the 8th. And that is, as I show you in previous indicators. Let me see if I can find it very quickly. One of my red consecutive indicators, is it this? Possibly. You can see how many times we have done more than 7 or 8 candles. You got 1 in here, 2, and this will be the 3rd in a context of from 2015. So that is extreme. And typically right after that, you get a correction, but then you get further upside. That is what the past performance says. Let's see how close we're getting now to that resistance there. Our target on the weekly was to maximum get to 119. That target is still on the table. Weekly and monthly is still very healthy. Now we are approaching the CPR, but now from the downside. So that level of 109.4 for the CPR is kind of the line in the sand to say, well, after a red engulfing, are we going to reconquer this? If we do, we have still upside to 123 from the CPR model, but still in a context of volume coming down. Let's go and look at, well, the buy signal. Of course, the hash ribbon has print and confirmed that on a daily basis. Let's see on the weekly basis. Some people like that. We confirm a buy also on the weekly. So there won't be any questions asked on Twitter. Probably everybody's already making noise about that. We made the noise probably 1 week before it happened. 113 to 14 is heavy in liquidation levels, and it has formed, I will say, since around the 23rd. So 3 days ago on Friday, with the move down, we started trapping shorts with their risk around here, and that could make it easier now because we have confluence of liquidity very close to the price, short term together with long term. That makes a good case that we hit that. If we go just into the 110 and we get a rejection there and we do the C wave lower, then we have just this incentive to get there. Once we get here, it's going to be tough for market maker because people are going to try to long to hit those liquidation there. Below the price, we have the 105 and we have the 100K that is definitely heavier in the shorter term, slightly more than the top that we have in here. Let's remove the 10x's. You can see that the high leverage is located at 100K. At 110, we got the most expert ones, people that enter with 10x. That is at lower risk because it's low leverage, but it's been so far looking like it's going to be sufficient to bring back the price to the upside. Remember that we have a double bottom formation on the RSI in here, and if we put, let me do it very quickly, let's say we put a neckline around an RSI of 54, and then we get this high and we move it to the top, that will bring around a 65. So 65 in here can bring now the price into, I'm sure if it's gonna be an all-time high, but that can bring the price up until 111.5. So we got around that area enough momentum to get there, and at that point we're gonna get very close to the liquidity of 113, and those 10x's could decide to start closing their positions, which is also going to contribute to bring the price higher. You can see how the full weekend the bidding was extremely active and leaned towards the longs entering with long positions. That has definitely helped to bring the price back closer to 110, and now things are flipping, not completely the other side. It's not like a minus 0.15 like it was holding the price, defending the 107 that we said in the video, that 107 definitely is being defended, but is kind of slowing down the move up, and the longs have pulled out from 45 to 38. Not a big pull out like we saw when we went to 29, but it's slowing that move into taking the liquidity of 113. Now you can see that with the whole activity over the weekend, that 1.3 million of delta is now gone, and pretty much on Sunday it left. Now we barely have 66k. That's how they consume the delta, and it could also be the case, I'm not discarding that maybe the delta is still there. It's just that this takes in consideration very close proximity liquidity pools to the price wise and time wise as well. So that could be the case. Let's see the order book. I'm not sure if Fire Charts is working today. Yes, it is, so that's great. And on the 1 month we have that 120k still there. Let's drop this to 99, and we have 115 with 35. The order book remains a little bit thin in my opinion, with 40 million. 42 is still small. We've seen a lot more. The purple wells are not necessarily part of this move up, so who is long in this? I'm not fully sure. Maybe it was a bit the purples, but now they're pulling out as we approach the 110. And remember, this is a long weekend, so I'm not sure, but Monday it was showing as CME open. CME was showing as market open, but I'm not sure about the stocks. We'll look into that in a second. What else I wanted to show? Yeah, we still have this fair value gap that overlaps with the liquidity of 110, and the 110 is very clearly seen here on the 30-day. Let's see if that's still there. Yeah, 110 to $300 up from that. We got the largest liquidity on the liquidation map of the 30 days, and on the liquidation heat map we have probably from 110 slightly higher into 114. So that is what I have for you today. Let's have a very quick look at the stocks indices, and let's see how things are looking. Pre-market prices, if this is gonna open, I'm not fully sure on Monday if it opens. No, nothing is really moving, so everything we left it kind of in this picture as on Friday. We just get some moves on gold, and Nasdaq is apparently updating, so probably this is moving because we have a candle here. So markets is open. If it is open, what I will be monitoring the rest of today is what is our reaction still against this resistance of 58, 59 on the S&P, and whether we're gonna get a further expansion here on the VIX. Of course, gold closed the highest close in here, so a continuation green candle as well is not necessarily great for the economy, because this is a safe haven, so it plays against any move of the Nasdaq. So one of the two needs to make a decision whether we reject that trend line on the RSI and we see further downside and then we drag together Bitcoin, or if we see a breakout, and people call that the Valhalla scenario in my comments already. Guys, I hope you appreciate the update, which is already 15 minutes. If you do, hit the like. I'm not gonna put another video today, so this is it. Later in the evening I'm gonna do an update as well, because I'm gonna be busy. I won't be able to put any altcoin today. Sorry about that. If you still appreciate it, hit the like, write down a comment down below, and I'll see you in the evening. Bye bye, take care.